In this video we are going to be analysing Mullen, ticker MULN. Now the reason I'm doing analysis on this is weirdly we did just see a big spike on it at 12 or 2 minutes past 12. Big candle, but again not a massive volume. I don't know if this is just a big error over on Think or Swim, but I did just see a few people talk about it, so I was like, okay, we'll check it out, we'll do some analysis on it. Where do we expect it to go from here? So as always, we go on to the longer term time frame, 6 month on the left, 1 year on the right. What are key levels we're paying attention to closest to where we are now? Now what we can see, very strong downtrend. I mean, you see this Mullen basically around $8 a year ago, now down at 19 cents. Whenever you see this, again, always be cautious. It's probably not something you want to touch long, just because if it can sell off that hard, you may be thinking, oh, it's at 19 cents, can't get much worse. Yes, it can, because don't forget, every 1 cent it falls from here is quite a lot. It's over a 5% move, really. So it can have a lot of impact if it continues to fall. So again, always be cautious. And again, these kind of stocks, if they're below $1, to stay listed on the Nasdaq, as Mullen is, it needs to stay above $1. So they might have already had notice, or that they may be getting it soon, but they need to be above $1 to be staying listed. So what you tend to see is a reverse stock split happen because they can't get there fundamentally. And if a reverse stock split happens, what happens? Okay, cool. Let's say it goes to $1 or $10, depending on what size they do a reverse split. All that's going to happen is, cool, let's say it goes to $10, just falls back to $1. Again, that's another 90% decline in price. Not exactly difficult to do if the fundamentals aren't going to change. So again, always be cautious holding something like this long. If you're looking to trade it, trade the breakouts, and fair enough. But holding this more of a hold and hope or an investment, again, be prepared to lose what you put in. But on the longer terms, we do have two key resistances to be paying attention to: 65 cents and $1.08. So these are, for, again, the long terms. Because this stock has sold off so much, we will need to go over a shorter term time frame, because we're not going to get any levels close to where we are. But these are two levels to keep note of. Because if for any reason we do get a big momentum spike, we do push to the upside again, whether that's on a fundamental or technical basis, these are two levels where you're going to see algorithms trigger, and you're probably going to see even just a lot of retail space trade at this level. Because again, if algorithms are triggering at that level, what's happening? Volume is increasing. If volume is increasing, it's going to be more likely that retail traders start to enter as well. So that's why we focus on these levels so much, because we know this is where volume is really going to kick up. Now though, those are the longer term levels. Definitely be paying attention to them. Again, the first time you hit them, you expect a pullback. If you retest and break through, you want to see the retest of that level, and then you can expect a continuation to the upside. Now what we do is 30-day chart on the right, on the left, 90-day chart on the right. Now this is going to give us some levels close to where we are now. So now we can actually get a singular support level, and this is at 9 cents. So if we fall another 10 cents, or kind of just at 10 cents, so yeah, basically 9-10 cents from where we are now, be paying attention to this. This is a key support. Again, requires a 50% sell-off from where we are now, but considering how weak this stock has been in the last year, it's not exactly impossible for it to fall another 50% down to this level. So I would be paying attention to that. You also have a level at around 14-15 cents. So again, be paying attention to these. These are the two key supports. They may provide small bounce opportunities. Again, not something I'm going to personally trade. I don't really like any stocks that are this cheap, because again, the spreads can be really difficult sometimes, and it's, why is it down so low? Again, if I can find a good day trading opportunity, then maybe, but not anything I would really look to hold overnight. Now, if we break to the upside instead, at 31 and 37 cents, we do have our first deviations on the 30 and 90 day. Again, the first time you hit these, expect a pullback. If you are able to then break over it on the second test, what you're waiting for is a break above, come back to test it as a support, and if it holds, good indication that we'll continue higher. Now this level I do quite like, especially this 31, a bit of a pivot. You can see we kept coming back, kind of hesitating at this level. So this level will probably be quite strong if we can push that high. So really that is what I would be focusing on, these two levels to both the up and downside, if you're looking to kind of trade it in the short term. But really the strong trading opportunities, at least to me, come when, again, you're on the longer term time frames. These are the main ones I trade because I know they're much stronger, and be paying attention to the 65 and $1.08. Anyway, that is the breakdown on Mullen. I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these two analysis videos.